Larry Haverty says Groupon's business model is, quote, like crack cocaine for the merchant. In other words, the key to its success. Larry is a portfolio manager at Gamco Investors. He joins us live this morning on the phone from Reno, Nevada. Larry, welcome back to the show. Groupon is successful in terms of revenue. The company is growing like mad. But back in 1999 and 2000, and I know you remember this, people wanted to see the path to profitability, the PTP. Can you see one with Groupon? The company is losing hundreds of millions of dollars.
Well, that was what just blew me away when I saw the IPO. The marketing expense in this company is absolutely inexplicable, and I eagerly await the opportunity to meet with management and see exactly how many of these costs are variable and how many are fixed. Groupon's a feet-on-the-street company. They have to sign up the pizza parlor who was advertising yesterday in Las Vegas by actually going in there and talking to the folks who own the pizza parlor. There's a couple of things that just fly out in this prospectus, and there's one trend that I absolutely don't like that's going on here, and that's the A and B shares. You have an odd management situation here, and they say our customers and merchants are all that we care about. The shareholders are at the bottom of the food chain here. There's no mention of using basically profit to create the jobs to help the shareholders, or to help the merchants and customers. It's a kind of convoluted capitalism. That's okay, but you accompany that with B stock, which gives the management absolute control. Sure. So that if you become a shareholder in this company, you're a second-class citizen to the management, and you can never displace them. And obviously, these people have their quirks. They've built a very successful business. They're going to be incredibly wealthy. But I just think investors have to put their foot down on this A and B share thing that seems to be the tendency for Internet 102. I just think it's just a very nasty trend, and it's really not what capitalism's about.
Larry, do you anticipate that the criticisms like yours are going to register with people like Andrew Mason before Groupon actually goes public, or is it a foregone conclusion they'll have a dual-class share structure, and your objective is really just to try and sort things out with the people who go public after this?
I think the latter is more likely. There's going to be just phenomenal demand, as you know, for this IPO, and it will have, as I've talked about in the LinkedIn thing, very, very positive implications for our economy. This is a company that, goodness gracious, it creates jobs. It's labor intensive. It takes capital from Wall Street, and it creates jobs. But I think investors have to put their foot down at some point over this trend. I'd like to see it start here, but I think it's probably too late for it to start here, and it probably is not going to start with Facebook either.
Larry,
I suspect there'll be A and B as well.
Okay, Larry, here's a question, though, about the valuation. You've heard people say the barriers to entry for a business like Groupon are incredibly low. Anybody can start a website, hire a bunch of salespeople, spend some money on marketing, and go into business competing with Groupon. If that's the case, if you believe that's the case, how on earth do you value this company when the more competition there is, the more they're going to have to spend on marketing?
I think it's very, very difficult to value. The thing that bothers me more than that, and that's the obvious thing, I started in the business 40 years ago in retailing, and in retailing you learn you can sell anything you want. You just give away the price. And you can, if you're a merchant here, you can goose sales like there's no tomorrow by using Groupon. Yesterday there was a major Groupon offer for $10 off at Old Navy, which is a highly struggling retailer division of Gap that just has very, very serious merchandising problems right now. The more Groupon does, the more the retailer hurts, because this is just a pernicious form of price competition. So there's eventually a level in the country where you can't do any more of this because the retailer can't make the profit when they do it. And I see a lot of discontinuity. I'm on the list in St. Petersburg and Las Vegas, and I think, moving down the food chain in the retailers that they're offering
Larry?
in Las Vegas and in St. Petersburg. Because I think once retailers do this, they realize it's like crack cocaine, and you have to get off it, or else you're not going to have much of a business.
Larry, thank you very much for joining us with what you might call the skeptic's view on Groupon. Larry Haverty of Gamco Investors.